Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Look, it don't cost you nothing to hit the like button. Just do it right now. Click it. Thank you. All right. Hey, I was going to make a video today, but listen, there's a lot to go on. I made a video for money moves, but there's a lot that's happening this week. This could be the most volatile week ever, ever, right? But it can also be a great buying opportunity. If you are heavy in the market, it could be scary. But if you have cash and you are ready for some dips, this could be a buying opportunity. Okay, so let's share what's going on. All right, so we can see that. Look, the Nasdaq barely it did come out with a gain, hitting another all-time high, but the S&P was flat, and you can see the Dow was actually down by 64 points. Right? So there's a lot I wanted to get into. I'm just going to just boom, 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 shoot it right at you really quickly. Right? So let's look at what is going on here. Right? So we had the EU, and the EU and the US was doing a framework for a deal, but the market did not react much. The market just went, all right. So now there's US-China talks that are going on, all right, with the looming deadlines that are soon to come. But that's the toughest deal. The deal between the US and China is going to be a tough deal. They thought they were going to get 90 deals done in 90 days, but that just did not work out. Okay. Let's see here. So here's what I want to tell you. If we have a dip, and I'm going to show you why we may have a dip, I'm going to be telling you that Wall Street is going to be buying. Why? Because they missed this V-shaped recovery from Liberation Day. You and I got in, but they missed it. And they are upset, like Tom Lee said, and I believe it. They are upset that they missed this V-shaped recovery. Now, in this video, I'm going to bounce from, no, I'm not going to bounce. Let's just go here. I want to show you guys this, okay? And I shared this in Money Moves, and I just want to announce that on Wednesday, which is the FOMC meeting, okay? Friday, we got jobs. Wednesday, we got big tech. As a matter of fact, 40% of the S&P will be reporting this week, okay? So we got 40% of the S&P will be recording this week, right? Then we got jobs coming towards the end of the week. Then we have the FOMC meeting Tuesday and Wednesday. Then we have the Fed decision, right? And then his Q&A, which moves the market more than his decision. We have GDP. We have all of this data coming out. Boom, 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 boom. And then we have the deal with the US and the EU, a framework that is done. All right, we'll call that a deal done. And just on today, the U.S. was talking with China, right? But nothing concrete yet. So we have all of that going on, which could whipsaw the market. I believe that the market is numb to the tariff news. It's just numb, punch drunk. But I want to tell you guys this because I've been easing you guys into what's finna come for those of you that don't know. We are about to enter two of the worst months in the stock market. Two, okay? Here's one. We just got off of one of the best months in the stock market. And we are about to go into August and September. You can see that this is historically, this is not 100%. And we have never in our lifetimes been in a tariff war like this. Never. So you got to put that in. All right. Take what I say with a grain of salt, but I'm just showing you what could happen. Now, if you bought everything at the top, you should be really, really scared. But if you got stuff, which I'm holding all of my positions, and you have cash and you wish you'd gotten in, then this is an opportunity for you. So look, you got August and September. August is a flat month, and then September is the absolute worst month of the year historically for returns, okay? As a matter of fact, let me play this for you.
July coming to an end and August trading right around the corner. In today's episode of Stocks in Translation, we are taking a look at seasonality for the month of August. And again, these are just the recurring patterns that we tend to see build in the market over time, not an exact science, and sometimes these patterns shift, but this is what I'm looking at right now. So here we have each of the 12 months, January through December, and this goes back to 1990. This shows the median returns, kind of similar to an average in green bars, and then in white, those white squares there, that is the percent positive. And what you're going to see here, August, notice August, these returns are not that spectacular. It's under 0.5%. It's not negative the way September is, but in fact, it is the third worst month of the year. And we're looking at a percent positive of only about 54%. And as a background reminder, I like to see that number above 70% because stocks usually go up. So August, usually not the best month. What you want to see is what tends to happen in March, April, and May here with nice positive returns, or October, November, even December here. But if you remember, March and April were not that great this year. So that is another reminder that seasonality, sometimes seasonality gets bucked and things can intervene and markets can go their own way. And of course, the tariffs with a brand new president this year, with Trump and the tariffs, all of that took a U-turn. And this is the U that we were looking at in the market right here. This is in white, what we have seen year to date in the S&P 500. Now in blue and in green, I have two different maps. So the blue is a median since 1990. That matches what we were just looking at in that first chart. The green is another way of looking at the market and the seasonality. This goes back to 1928. So what I'm seeing right here is we are right in the market right here. We tend not to have a stumble in this market model until we get to early October. And October, as I've said many times before, is prime time crash season. We actually get an uptick in volatility in September. But September, October, November are those months that you want to kind of watch out for. So now I'm going to zoom in.
So this year, I believe that we're going to have a positive. I believe that the next 2 months will be the worst 2 months. And I believe that we will end this year higher. And a lot of analysts believe that too. Let me know what you think. Now, I'm going to finish this video out because I want you to hear everything he has to say, and then I'll have my closing remarks.
On August alone. And I have these same two market maps that we were looking at before. Since 1928, same day of the week, that's in green here. And then since 1990, that is in blue. And what you're going to notice is we start off the month on a downbeat. That very first day tends to be historically negative. But then in both of these models, we eventually climb out from underwater. In the blue model, since 1990, it takes about half of the month, and we finally get there about 15th or 16th of the month. And then in the other model, since 1928, same day of the week, we get to positive territory a little bit earlier, and we end the month a bit higher. So we could have lackluster returns, and of course, anything could actually happen. We could have new tariff news that intervenes and takes the market down again. We could have something like a very optimistic or dovish Fed this week that sends the market higher. But any case, I do want to close here with a bonus, and this is US dollar index seasonality. And I'm including it here because I have these two very similar models to what we were looking at before. Instead of 1990, I'm going all the way back to 1970 in blue. And then in green, I have since 1971, those years with the same day of the week. And I'm going to trace out that green. This is a model that I'm really paying attention to. It turns up right now, right at the end of July into early August, and it sends higher basically into the beginning of October here. And what is a US dollar? What does a higher US dollar mean? Well, that tends to disrupt a lot of risk markets. Sometimes it's an impediment to the sometimes it's an impediment to stocks going higher, commodities and crypto as well. And with all the bearishness on the US dollar, and I totally buy that case, I think the positioning and the sentiment is such, it's so bearish that we could actually see a strong up leg. So that's something I'm going to be on alert for in the month of August.
So there he showed you, even though traditionally the next 2 months are bad, we could see an uptick because of everything that's happening. Now, I personally, I will be looking forward to a pullback, to be honest with you. It will be a healthy pullback, all right, in August and September, or just August. But his model in the end showed that because we have all of these things that are changing in this cycle, right? Last month, remember, it was supposed to kind of cool off, but it didn't. This year has not been a traditional year because of tariffs, okay? And because of the geopolitical things, tariffs, and the potential of the Fed lowering interest rates. Now, here's what could happen. China could work out a deal in a perfect world. U.S. and China works out a deal, right? The EU deal with the U.S. is perfect. And then the Fed, by some miracle, even though the Don came to pay him a visit with the cameras rolling, a week before the Fed meeting, he could literally start to lower interest rates, even as little as 25 basis points this Wednesday. Then the market will see that as positive, right? But I still think there's going to be chop. I think that it could be chop, right? I'm going to be loaded and ready either way it goes, right? And I mean loaded with cash. So what I'm doing is my dollar cost averaging, and I let my people in Money Moves know what I've been dollar cost averaging into crypto. I made that much smaller, and I'm stacking more cash in stocks and crypto to buy in deeper dips if they should come, right? So that's what I wanted to let you guys know of everything that's going on. Now, as it pertains to this Wednesday, you guys know I've aired probably 18 FOMC meetings here, and sometimes we even traded live. But I won't be doing it this Wednesday. I will be loaded for money moves. And what I mean by that is, for those of you that's in money moves, if the market does dip. So what generally happens, good people, I got proof that what generally happens is the market kind of rises just before the Fed speaks. So the market generally goes up the day before, though this could be different. I found this, right? And I've said this time and time again. While the day before the Federal Reserve FOMC meeting can be volatile, historical data suggests that the stocks tend to rise in the 24 hours leading up to the announcement, right? And you know that I've said that. But what normally happens during his speech, after he releases his decision to lower rates or not, to stay or not, to increase or not, after that decision is made, what normally happens is during the meeting, when the media is trying to ask a got you question and not questions that's going to help us, the market generally takes a dip. During that dip, I am going to be talking to my money moves. I'm going to be loaded. I'm going to have my fingers loaded. And if I see any dips, because there's always overreactions or knee-jerk reactions, then I'm going to be telling you guys what I'm buying in stocks and crypto. So I'm going to be working this Wednesday for Money Moves. So I won't be airing live anywhere. But money movers, just know that if there's some dips, I'm going to be buying and I'm going to be showing you. Hey, come join us in Money Moves, okay? That is the top link below. Come join us. We have everything you need to make money in stocks and crypto there. I'm just showing you guys what I'm doing, building out both stocks and crypto portfolios, right? So that is Money Moves, good people. That's the top link below, and I will leave a pinned comment, right? Come join us as we make money. But there is a saying, and I will have to say it again. First, anything I say is not a suggestion for you to buy, hold, or sell. I'm not your financial advisor. I'm just a dude on YouTube making money. But I will also say that there's a saying that only a fool trades during the FOMC meeting. Well, I've been a fool many times and I've made money many times. Okay. So I am going to be doing more buying this time, because if the market does, now the market in the next 2 months could come down as much as 10%, the stock market, it could. Is it likely? I don't know. We have to see. If the US and China deals fall apart and China says never, and the Fed says we're not going to decrease interest rates all this year and next year, market is going down. So you see why we can't give a direct answer. At this point, we have to look at the data day by day and make decisions day by day. So that's why I got Money Moves. So come and join us. All right. We'll see you tomorrow. Live, love, laugh, and learn.